Today we're going to talk about admitted and non-admitted insurance.
There's two different markets in insurance. You have the admitted market, which is a more regulated market. Most insurance companies that your average consumer knows about, or what I like to call like your TV commercial insurance companies, those are typically on the admitted market side. The non-admitted side is less regulated. So one of the ways they're less regulated is with their rates. So a lot of times admitted carriers, they have to file their rates with the state. The non-admitted carriers can change their rates a lot more easily.
Not during while you're under contract, correct?
Yeah, oh, absolutely. The non-admitted market is also called the surplus lines market, or the excess and surplus lines market, or the E&S market. It was created because there's a lot of risks that are higher risk, so harder to insure things. Think on a commercial side, like airports or bars, nightclubs, strip clubs, car dealerships. These are places where there's more risk, and so they're typically always written in with a non-admitted carrier. In admitted carriers, it's more like your mainstream contractors and mom and pop restaurants type of things, shops, things like that.
Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live 888-994-4995, Studio A.
Hi, and welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something that will help you make a little money, maybe save a little money, or just help you navigate the crazy world that we live in. Today we're going to talk about admitted and non-admitted insurance carriers, groups, I don't know, something to do with admitted and non-admitted. And we have with us today Brandon Felder with Goosehead Insurance. So welcome, Brandon.
Thanks for having me.
Thanks for being here.
Exciting day today with the interest rate cuts.
Yes.
We'll see how that affects things, but unfortunately that won't affect anything for insurance more than likely. So hopefully it can help you get some more people under contract.
I feel like I have deja vu here. Deja blue, deja blue.
Maybe deja vu, not
deja vu. That's
deja
it.
Blue is
a restaurant.
A restaurant. Yeah.
All right. So tell us, what's the difference between admitted and non-admitted?
So this is really important for a lot of people to understand, especially when it comes to condos, which we'll talk about later. So there's two different markets in insurance. You have the admitted market, which is a more regulated market. Most insurance companies that your average consumer knows about, or what I like to call like your TV commercial insurance companies, those are typically on the admitted market side. A lot of the big companies are on that side. And that side, like I said, is more regulated. Let me pause and say, when I say carrier or insurance company or insurance provider, they're all kind of synonymous.
Okay.
Or insurance market.
Okay.
I'll say that's synonymous as well. So I'll try to stick to insurance company, but I own an insurance company, but I own an agency.
So you're writing with?
So I'm writing with a bunch of different carriers.
Okay.
And this matters on the non-admitted side. But I go to these carriers, I find the best rate for the client, I shop it around. But on the admitted side, it's more regulated, and they have something in Florida called FIGA. And FIGA is FIGA, the Florida Insurance Guarantee Association.
Okay.
And why is this important? Well, Laura, you've been in real estate a long time. How many years?
24 as an agent, but like a longer doing
24 as an agent. Probably as long as I've been alive.
And I've never heard, thank you. Yes, I am old. I am. Thank you.
So the reason I say this is you have probably heard over time a lot of insurance companies going under.
Yes.
In Florida. And there's a big history of this. And pretty much all of those are in the admitted marketplace. So what happens when an insurance company goes under? Are you screwed? More than likely not, because of FIGA. Just like your bank. When you lose all your money in the bank, if the bank goes under,
up to
$250,000, you're covered by FDIC. FIGA is the same concept. If your insurance company goes under, well, you're going to be protected because your FIGA is going to take over.
Okay.
And they're going to service that policy until it goes somewhere else. Or if there's a claim, they're going to be able to take care of that claim, which is really, really important.
Right.
So, also,
So should you worry about the ratings of the carriers?
yes.
Okay,
And,
because you just said you have FIGA, so why would you worry about the ratings?
well, this is where I think there's an anomaly between the consumer mindset on insurance and the insurance company's facts of business. And what most consumers don't understand is the way that ratings are come up with for insurance companies is based largely on how much money they have in the bank. They've got to have a lot of money in the bank in order to get better ratings.
Okay.
And so people think, well, insurance companies, they just want to screw us, or they just want to charge more and more. Well, just to stay in business, they don't need to just make a profit. They need to keep a lot of money in the bank in case there's a large hurricane or something that hits.
Right.
Because they're looking at things as not just these singular claims, but large catastrophic type claims, like hurricanes in Florida. And so the rating does matter. There's two main rating agencies for Florida, which is AM Best and Demotech, and they have different scales. Pretty much all the companies I'm writing with are like A rated or better, meaning they have plenty of money in the bank.
What would be an example of a carrier that's not A-rated?
Well, to be honest with you, I don't really know because I don't work with them.
Okay.
So any of the big companies that have rapport in the industry and are worthwhile working, then that's who I'm working with.
Okay.
You can go on the AM Best and Demotech websites and see who's rated and who's not. It gets a little bit confusing on those websites, but yeah, it's a good question. That's not the biggest thing though. The biggest thing is that if your insurance company goes under, that you're going to be protected with FIGA if you're with an admitted carrier.
Okay.
Now
what's the non-admitted?
Yeah, let's switch over to the
I wanna know,
non-admitted.
what's the non-admitted?
The non-admitted side is less regulated. So one of the ways they're less regulated is with their rates. So a lot of times admitted carriers, they have to file their rates with the state. The non-admitted carriers can change their rates a lot more easily.
Not during while you're under contract, correct?
Yeah, oh, absolutely.
Oh, how so?
So for example, I have one carrier that I work with, and they all of a sudden put in a rate change. And within this 2-week period, I had to call all my clients and say, hey, they just submitted a rate change. Your premium went up by
In the middle of a
$100.
1-year policy.
No, not in the middle of your policy.
Okay.
Now you said under contract. So I'm thinking like while they're
I
under
meant
contract
like
of a
they're already in contract with the policy.
No,
so,
no, no.
Okay, so when they're like, okay,
Yeah.
so until you fully bind it.
Until
they
you
can-
fully bind it, it can change.
Right. Well, that's on every one of you insurance people's like phone. Like,
What's that?
oh, we can't bind her until it's fully bound. Like rates can change.
Rates
or-
can change, and it's important to note that. But it's easier for that to happen on the non-admitted side than on the admitted side.
That's why,
The-
as a realtor, when my sellers are selling, I'm constantly like, did the buyer get insurance? Did the buyer get
Yeah.
insurance? Because the insurance can be a deal killer.
And it's really important for realtors to listen to you because I can't tell you how many calls I get a week of a realtor that says, I didn't get this we didn't shop for insurance until the last minute. I had one last week, and this plays in this story. I won't say any names, but
Obviously, somebody I know.
they didn't get it. No, I don't think you do. They
Okay.
didn't get their insurance really into semi-place, not even fully bound, until a week before closing, less than a week before closing, on a property in Key West. That was I want to say it was like 1.5 million
And it was
in
like, what,
purchase price.
$13,000 a year?
I ended up having 3 policies with flood and everything, and it was about 17. Now, the reason why that's important is because the
the buyer was out of their due diligence at that point.
Oh yeah,
they're like getting whacked with that
$100,000 deposit,
and they're getting whacked with $17,000, and they don't have any. I mean, listen, for some agents, that's what they're trying to do to their clients. Let's be fair.
It's sad, but it happens.
I mean, my thing is, I want you to fully understand your transaction. And listen, if you don't buy that house in Key West because you realize, because insurance is very expensive there, or like the Keys or wherever, maybe you're going to make a decision to go in a different, direction. But you're always going to remember that I wasn't that person just trying to sell you something.
Yeah.
And that's important. But 17,000, but then here's another problem. If you're out of your loan commitment period and that insurance knocks that whole deal out of whack.
Like ratios.
Ratios. Like, I think, and I'm not an attorney, nor do I play one on TV, but I'll pretend.
You could.
Okay. I believe your deposit's at risk.
Oh yeah, absolutely. I would agree with that. And one thing I love about you, Laura, is that you say all the time, there's all these related industries with real estate: insurance, loans, construction, title, and then real estate itself. I call it the 5 facets of real estate. And one thing I really agree with you on is that you know enough in all the related industries just to be dangerous. And a lot of agents don't know that, and they don't understand that your loan approval period could put you at risk for default on the contract because of insurance.
Yeah.
Everything is playing in to having a factor on the other.
And here's the funnier part, right? Sellers don't know that if their realtor doesn't know what they're doing, and they get that, you get a pre-approval from like Missouri, from Quicken Loans, like their insurance is like $2,000 a year. When I get people that move from out of state, I'm like, I just want to let you know, this is what our taxes look like. This is what our insurance looks like. I just want you, especially if like they're coming, they're like ready to come here. I'm like, I'm not trying to keep you from coming to Florida. Come, right? I want to sell you a house, but I don't want you to be shell shocked. Like, oh my God. So one of the things that I find that I do differently is I say, when I get that offer, I'm making sure, because we have a lot of inexperienced agents, and there, sometimes some lenders, it depends, like they're going to say, like, because we're getting ready to go into September, we are in September, going into October. So now they're going to use the new taxes, and that could change things. And they're using the old taxes to qualify. They're using the old, they don't know what insurance is. Like, what happens when you get the new lender that all they do is just take the paperwork and then it goes to the next person?
It's such a pain.
Right, and nobody knows. So.
One of the things I ask people from out of state is, who's your lender? Because if I hear that it's one of these out of state lenders that are estimating insurance based on where they live,
let's double check.
It can fall through. And so to finish out that story, I had to go non-admitted for one of their policies. And
what does that mean?
So sometimes we split policies. We'll do a wind-only policy and then an X-wind or fire, water, liability somewhere else. And so on that policy, I went X-wind, or I went non-admitted. Part of the reason I went non-admitted was because they were in the Keys. The house was built in 1918 or something. It was extremely old.
Holy cow!
And it was wood frame in the Keys.
Termites.
But they were doing short-term rentals. So anytime you're doing short-term rentals,
So is that at Amwins?
that's where I put them. Yeah.
So that's a non-admitted.
So, there's another layer.
Okay,
But
I'm learning.
I don't know if we're allowed to mention on the show like certain company names. I always avoid that. But yeah,
Well, we're not talking bad about them. We're just mentioning.
yeah,
I mean, you could be helping
Amwins
to
is an excellent company.
Yeah.
I love working with Amwins. They're one of my favorite companies to go to. They're not a carrier, so I'll explain that in a second. But one of the
Well,
reasons
then you know
why.
what? Let's hold that thought. Let's go to commercial break, and when we come back, we're going to talk about a little bit more about Amwins. So stay tuned, and we'll be right back.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fish, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fish is committed to providing his customers with mortgage services that exceed their expectations. Ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fish today at 954-729-6933 or max.fisch@nwmcorp.net.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FIRPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at thelorasell.com. And now back to the show.
Hi, and welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. I'm here with Brandon Felder, and he is from Goosehead Insurance, and we are talking about admitted and not admitted when it comes to insurance. And who knew that I already knew not admitted?
Good job, Laura.
Yes.
Well, you know just enough to be dangerous.
Yes.
So I want to come back into this story about this property. So one of the reasons we went non-admitted was because the house was old, which happens a lot. It's in the Keys. A lot of coastal restrictions apply to admitted carriers, so it's hard to get coverage in the admitted market, easier in the non-admitted market. And then the third reason is they were doing short-term rentals, like an Airbnb or VRBO.
Okay.
That's usually much easier to get. In the non-admitted market, a lot of admitted carriers won't touch that. So that's why we went there. And the premium on the non-admitted policy wasn't bad. It was the wind that was really expensive.
How much was it?
The hurricane coverage, I think, was like
14,000?
Yeah.
But I thought you said the other way was like 17.
No, I put 3 policies together because they needed flood, which was like 2 grand, 14 for the hurricane coverage only, and then it was like $1,300 for the non-admitted policy. Wasn't bad, but the problem is that all the admitted companies would not write that policy for the one reason or another, it being old, short-term rental, whatever it is. So the rule in Florida is you have to get 3 denials from admitted companies before you can go to a non-admitted company.
Oh.
Which isn't hard to do. It's pretty easy in the marketplace right now, but that played in because no admitted carrier would write the liability and fire and water on that old of a property.
So, do you think, I mean, are we just so upside down in the insurance world that like condos are going to continue to rise?
Well, a lot of the condo issues are because of the commercial insurance world, because insuring the whole association and all the buildings is a commercial policy.
Okay.
And that's really difficult, especially after Surfside and all this other building renovations, projects, assessments. You know more about that than I do. That's been difficult, but that's what causes the premiums to rise a lot on the association side. Then the association fees go up. But from what I've seen, I haven't seen a big jump in condo policy fees, or I'm sorry, insurance policies. So an HO6
Really? Because
policy.
a lot of them are telling us, you're talking about for the actual tenant or the owner.
The owner. So
but
what we call
the actual
walls-in coverage.
commercial for the building, it has been.
That's gone up a ton. And then that's why you're seeing, like, my wife and I owned a condo in Deerfield, not on the beach, West Deerfield, almost Coconut Creek. We moved in, we bought it 3 years ago. We moved in, we paid, I think, $320
Oh my gosh.
per month.
Were you able? Oh, 320 maintenance. Okay.
Yeah, maintenance per month. Not bad. The next year it went to like $340 or $350,
We're
maybe
like,
even
okay.
$330. And I was like, all right, that's manageable. We sold, got out of there. Had friends that still live there. Now it's at 525.
And that's still not bad.
And that's still not terrible. Yeah.
Well, I have a lady tonight, we were talking on the way here, we get ready to put her house under contract, and I said, she goes, well, I really want to live in this particular area, and I was like, okay, the maintenance is $900 and change. I said, I wouldn't do it.
That's a lot.
It's a lot.
Yeah.
I have another lady that's looking at a condo right now, and the agent is pressuring us to sign that if an assessment happens while we're under contract, that
Sounds sketchy already.
right? And I said, okay, listen, then we're firm on our offer. And my client's like, no, I want it. And I'm like, what are you doing? Like,
Yeah.
like these could financially destroy people.
Yeah. Condos they're a hot topic right
I'm
now.
not telling people not to buy them. I'm telling you to be, plan to have like extra money aside. Know
Yeah.
that your maintenance is going to go up. Be prepared. Make sure that your agent's honest with you. Your agent's pointing out things to you, that you're asking questions, you're reading minutes.
Yeah, it's really important, extremely important. What's funny is the majority of condo policies I write are in the non-admitted market, because it's so funny that they created this separation of the admitted versus non-admitted. Which, to add in a caveat, I like to do this. The non-admitted market is also called the surplus lines market, or the excess and surplus lines market, or the E&S market.
Okay.
I say non-admitted, it's a little bit easier. But it was created because there's a lot of risks that are higher risk, so harder to insure things. Think on a commercial side, like airports or bars, nightclubs, strip clubs, car dealerships. These are places where there's more risk, and so they're typically always written on a non-admitted, with a non-admitted carrier. In admitted carriers, it's more like your mainstream contractors and mom and pop restaurants type of things, shops, things like that. So it was created for that, but also it's supposed to be cheaper or more expensive than the admitted market.
But that's not always
But
the
that's
case.
not always the case. And it's been funny to see that, because my non-admitted rates I just had a single family the other day that the non-admitted rate was cheaper than the admitted rate. Now, you're not supposed to go to the non-admitted because I have an admitted option, but there's some caveats there as well.
So are some people writing policies, like for the Airbnbs? Are they writing like the full policy on, because Citizens, I heard, is no longer going to be allowing Airbnb on their policies.
They never did, that I know of.
Really? Because I had an agent the other day, we were talking, and they go, oh, my insurance went up. And I said, oh, I'll have to refer you over to them and give them a call, telling me, oh, my insurance went up. And I said, okay. They go, yeah, Citizens is getting ready to drop all Airbnbs. And I'm like, well, I have my wind for my Airbnb on Citizens, which I would think that has no effect
They don't
on
care.
them.
Yeah, they
right.
don't care.
That's their wind. And then Amwins has got, all the liability policy on it, right? So
Yeah, if it's a wind-only policy with Citizens, they don't care if there's a short-term rental. If there's liability or regular coverage outside of wind, they do not allow less than a month of a rental. So anything 30 days or less, they're not okay with it.
how do you feel about Amwins, if let's say somebody does get sued on them?
So Amwins is an insurance company. They're not a carrier.
What's the difference between an insurance company and a carrier?
So a carrier is who's holding the actual liability. So who's going to pay out the claim? That's the carrier. The company sometimes, or agency or brokerage, is just a pass-through middleman. So I have a retail agency
Okay.
or a retail brokerage. Amwins is what we call an MGA, a managing general agency.
Okay.
And so if you wanted a policy with Amwins as the consumer, let me say this. If you wanted a policy with Progressive, you can go through me as a broker and I can go to Progressive, or you could go to Progressive directly.
Right.
You, as the consumer, cannot go to Amwins directly. you have to go through a broker like me to get to Amwins.
Okay.
But your policy is probably not held, speaking of liability, by Amwins. Amwins has a relationship with, let's say, Lloyd's of London or National Fire and Marine,
Okay.
that I can't go to them directly. I have to go through a second tier broker like Amwins to get to.
Well, this is very interesting, and
I love it.
we actually have run out of time, and we can go on and on and on, like all night, but we're not. So what is a great way for people to get in touch with you if they need an expert when it comes to insurance?
It's important to know all these things because there are little things
It's a
that
lot of
matter
information.
that matter to people, and I get kind of nerdy on this because I really want to help people. And so anybody that needs help, you have questions, you're concerned, you just want to have a sounding board for insurance, my phone number is 954-326-9842.
Awesome. And if you're looking for an agent that actually cares, will take care of you, make sure your house is being sold for the most money possible, is patient, and as long as you're patient with me, give me a call, Laura Sanders, Remax Direct, 954-650-0827. Until next week, thank you for listening to Making Money with Laura Sanders.